What's up, guys? Anthony here with Special Analysis. Hope you're having a wonderful day. Let's talk about the SPY. I did a video about this a little while back, and I want to talk about it a little more in depth today. And the reason I'd like to do that is because we are likely to settle below the 200-day moving average for the week. And in doing that, guys, this could be kind of the start of the break here. So I want to talk about the chart a little bit and discuss kind of how things are shaping up here. So we've made some, consecutive lower highs, consecutive lower lows. It'll be telling what happens next kind of from this point as we kind of continue a little bit lower. I'll show you kind of what I'm looking at for myself here. Just calling this off. So we've really broken this channel structure. You can see we kind of fluttered below it earlier. The long-term channel structure did catch price action. The 200-day also did. Brought us back to the 50 and 21-day moving average, and ultimately, has now kind of had us cross here. So we are testing a high area on the volume profile. You just look at a year's worth of data. This is a peaked area. That's where we've kind of slowed the roll to the downside. But through this area, likely to test 405. If we break 405, we could fall into somewhere between, I would say, retesting this prior low, 380-ish, could be the next test if we really kind of tumble here. We've broken through this structure. We could fulfill what would be considered a double channel formation, which would look something like this. But that kind of puts us right into the thought process around 405, 400. So we'll see how things play out, but for the moment, guys, this is looking really weak. There was a big area of consolidation here, but you could see at that time we were respecting the 21 and 50-day moving average. Really just kind of a nice pattern here that kept price action going. And this is not looking healthy. The top may be in. And if it is, that is what it is. We will be seeing bear market rallies moving forward as we descend our way lower back into, here is, what is this? October of 22. But bigger picture, guys, this is not a good sign. Okay, I'll go to a weekly chart and show it to you. Like, this is not a good sign. Not a good sign at all. So, these are, notable lower highs right here. And this could lead to, the beginning of what might be a bear market. And, this area here would end up being a sensitive area for price. If we falter through, call it 3.25, 325-ish, we could fall back towards 250. I'm not fear-mongering here. I'm not saying that that's what's going to happen. I'm just saying that, from pure technical analysis, guys, we could be taking a pretty steep pullback, and you should be prepared for it, because if it does happen, we're going to see broad market selling. Now, for me personally, this is my favorite season of the year, when the market takes a shit bath, because this is when the most amount of money can be made the absolute fastest. If you're not fluent in how to do that, I encourage reaching out to me and seeing if one of the services I offer, whether it be trading live with me, some of the software components I bring to the table, some of the short-term swing trading services I bring to the table, can be of service to you. Because if we start falling here, it could happen fast. And when it happens fast, guys, you can make a shitload of money. It's amazing how many retail traders step out of the market when things look dicey. And that's when I get the most excited. So I just wanted to shoot this video real quick. I did do a video a few weeks ago here on the SPY. You can look on my YouTube channel. It's there, probably somewhere deep in the well of videos. But it's happening. We're really likely to settle here below the 200-day moving average for the end of the week tomorrow. And with that, we probably fall into 405 and we start testing significant levels from there. And listen, we'll get these corrective rallies, but don't be a sucker. Don't be a sucker. Let the market tell you what it's doing. If we are making sequentially lower highs, so these are significantly lower highs, so I would call this macro lower highs, and I would call these micro lower highs. We're in a downtrend, folks. Call it whatever you want to call it. That's what we're in. Those who deny it are the ones that are going to get hurt the most. Those who acknowledge it are the ones who can use it to their benefit. So I want to leave you with that thought. And again, I look forward to speaking with you. Take care.